Hello everyone and welcome to the KMTRADERS channel. So this is the full market analysis volume 10. So reaching double figures now in this series. So we just look at the entire market and give you our perspective where prices are heading to, and give you some levels where we're looking to switch our bias and change over, and also potential take profit levels. Okay, so take this video with a pinch of salt. This is obviously a weekly analysis, so a lot of things can change within the week. So for more updates, we have that Telegram group chat that we talk about in each of our videos. So that link is in the description below. I'd highly recommend you to join it. I won't talk so much about that, but just have a look in that chat and check it out. And if you like it, I'd just consider joining. But ultimately, it just provides more up to date with all the charts that we look at. Okay, so with the pairs on the right hand side here, you notice that we have some yellow highlights. These are the pairs that we won't be covering. This is because we'll provide the individualized video for them as we're looking to trade it for this week. So for this trading week, we do have a few pairs switching momentum and bias. So I think this week will be a good one to look out for. But we will start off with this weekly analysis and start off with gold. Okay, so we can see in this week we were looking for almost the buying potential to continue it, but the seller momentum was brought in at this level here. So as you see, there's a lot of wick rejections here. So this is the first step of or signs of where price starts to reverse on us. So if we look on the 4-hour time frame and start to observe the sentiment of the market, start to really understand what price is doing at these levels, as opposed to just watching all on the small time frame, you can start to see where price is likely to head. So if you start to see these wicks occur in one block of area, understand what this is telling you. Okay, so if I was to just quickly show you this on a lower time frame, let's just say a 15-minute, you can see how choppy this is, but you can start to see a lot of patterns start to form here. And if you look on our Instagram, we have, I think we've covered the head and shoulders pattern, and I believe the channel breakout pattern. We'll obviously cover more patterns to come through, but this is an example of the head and shoulders. It's quite hard to, sorry, the double top. So it's quite hard to see this, but it's just ultimately a big M that forms, and you would trade on the breakout. We'll cover this on a bit more detail. It's a very bad representation of what we're trying to show, but we'll probably cover this a bit easier on a Instagram post, for example. But ultimately, what you would do is wait for a price to form this sort of pattern here. And what you would do is you'd find this area here where price is failing to close above, and then your entry point would be on this break of this neckline here. Okay, so then if you was to put the entry point, it would be here, and this is your take profit level, and then your stop loss would be, let's just say, 5 pips above the high. So that's just a typical entry pattern to consider. But yeah, so these sorts of patterns occur on all of these wick rejection areas here, and the reason for that is because price is not pushing up, and the patterns of reversal occur here because you can see we've got this huge wick to the upside, failing to push higher, moving to the downside, closing with that rectangular body. So when we talk about the zones where we want to see wick rejections and with that small rectangular body, this is what we're aiming for, and why we look for entry within this region, because we look at price in the sentiment form, and that's what price and data is telling you. Okay, so with that information, you can start to look for these patterns in this area. If you have a strong candle in that goes over this zone, let's say for example this here, you wouldn't be looking for the reversal pattern, because you can see how you can just see how this is clearly a strong momentum to the upside, whereas we have wicks to the downside here, so you can start to conclude that price is failing to push lower as prices ultimately closed higher in this 4-hour price action. Okay, so understand that within 4 hours you have the 1 hour time frame, the 15-minute and 5-minute, and so on and so on. So this is how stepping down your time frames can get you the best entries. Okay, so what we're looking for in this market at the current time is a sell bias. So we are looking for a potential push. So we was looking for entry points in this region here, but as prices clearly rejected this zone here through wick rejections, we're now looking at around 1740. So from this level of this orange zone, we can see that this zone is from the highs from 14th of April. So we're just looking for this rejection to hold. So we could look for a double top at this range here before we consider selling. Again, we've had a look at a discussion of where our take profit levels would be and our invalidation zones in the gold video that we just put out. So that's last week. So the bias still remains the same. The only adjustment would be the entry point to consider ourselves. So it would be roughly in this zone here. So around 1742 to 1738 is a potential sell bias. Okay, so that's with our gold. If we do go above this zone here, so around 1750, my bias will change towards the upside. Okay, so I hope that helps with the overall understanding with gold. We're going to move on now, I think. Yes, we are. Yeah, we're going to move on to the next pair. So let's have a look here. So we're not going to cover New Zealand dollar, euro, US dollar, or the Aussie dollar because we're looking at them for next week. So the US dollar to the Japanese yen, a very interesting pair to look for and to take note of future price action. So we have our reversal zone that we mentioned before. So from the last week, we have these arrows drawn here as a big potential reversal. So we were looking to see if price was able to push higher at this point, and we clearly found evidence that we're pushing down here. So what we're looking for is a reaction state. Our bias is still towards the upside, so still will be considering a buy, but this would be on a very, very low time frame as opposed to the 4-hour and the daily. The reason being is because the momentum and the structure is still showing momentum to the upside. You know, we have our EMA still showing some signs of support. So that's all good news there. So the game plan really for this pair is really just to step back and not trade aggressive, just obviously through personal preference, but I will be looking and waiting for price to come back into this area. Now, if price starts to reject it again, that would give another potential idea that this could step down and again start to look at that structure to break. And if that does happen, we'll obviously look for entry points, but to sell. But until that happens, again, this is obviously a presumption, but we're looking to see exactly how price can react in this area. So once we can get, you know, if price manages to get into this area, obviously two things can happen. We can get a straight rejection or we can get a straight closure. So if we get that straight closure to the upside, we'll wait for this pullback within this range and look for that indecision in the market before we push higher. So that's what we'll look for if we get that buy bias and if we can continue this correction momentum to the upside. But if price fails to push higher, you could consider an aggressive entry just from previous price action, as this zone is rejected multiple times. But you could again enter here with a safe stop loss above this high here, and consider, you know, pushing lower if this does work. But again, there's a lot of indecision with this pair. You know, there's a lot of fundamentals that need to go into play here, so just consider that as well. But again, this is our interpretation of this pair. So not going to push this pair so much. We're going to take a more relaxed approach. We're not going to take this as aggressive as the others. That's obviously just down to our own preference of trading. More of a relaxed approach and waiting for the correct times to again buy or sell. Okay, so I think that will be all for that pair. So moving on to the Canadian dollar to the Japanese yen. Again, same here as we talked about for the last couple of weeks. We're still stuck in this range pattern. Again, if you really want to trade this, I'd recommend you to step down on a lower time frame and consider looking for your entries on that point. So you can use a lot of range bias here and take your zone to zone on a lower time frame. I wouldn't, because we look at the 4-hour time frame on the daily. We just don't really consider this as a tradable option. Again, our approach is if we don't have the correct sort of direction or bias, we're not comfortable trading it and we just move on. So unfortunately, this pair has just been stuck in this range since around March, so the start of March, and again it's been quite a long time. Okay, so we're not going to approach this pair in detail, but again, use your own due diligence and again follow your own trading plan and go accordingly. Okay, so we're not going to cover euro to the Japanese yen. We'll cover this tomorrow. We'll move on now to the euro to the New Zealand dollar. So again, we have this huge step to the downside, clear break of the uptrend. We're just now finding the buy pressure being respected on this downtrend. So this would be the retest level. So our bias for this is towards the upside. So we are looking for buys. We're not exactly going to take a really precise range here. We're going to look for momentum to shift to get above this level here. Once we get to this point, I'll know that we are pushing higher. So for the lower time frame, I would consider looking at this pullback phase as we're pushing down aggressively in comparison to the upside. So this on a higher time frame is the correction phase. So this is the pullback phase that we talk about. We just need to wait for that indecision. So because this move is really quite large on this 4-hour time frame, on a higher time frame this is just simple correction. So because we look at the 4-hour as our main our main form of entry point, we look to consider how big this move is and see the range with it. So this range is 600 pips. So again, this is more of a higher time frame approach as opposed to a lower. So obviously I hope that makes sense. So our plan and action behind this is just to wait for price to find that confirmation that we are pushing up from this point, from this respected downtrend. If we can get that momentum to the upside and see if we can start stepping up, just do some higher highs, higher lows, higher highs, higher lows, and eventually if we can push above this zone here, it would be of good use for us to consider that we're pushing higher and momentum will be in our favor. So this is where we'll start to look for our buys for this pair, and again we won't have the trend against us. As of right now, this momentum is stepping down. If we start to aggressively buy, we would have lost all of this move here if we were to buy straight away. Okay, so I hope that makes sense why we're not looking to buy aggressive here. But equally, if price is to step down, we would be looking to sell if it goes below this level here. Okay, so the same thing really, it will be just to wait for that pullback, that indecision before pushing lower down. Okay, so I hope you can really start to understand that this is not a complex method. It's just all about waiting and picking the best ideas. It's not trading because you want to trade, it's trading because the opportunity is there. Once you understand that opportunities approach on any time frame at any level, you just have to then find your level of comfortability. Are you a person who wants to trade all the time, or are you a person with other responsibilities that would rather trade on, maybe once a week, or maybe once a day, or maybe 2 trades a day, sort of thing like that? Or are you a person who is very aggressive and wants to trade 10 times a day? Okay, so trading is very personalized. It's all about what you like, again. But this is a method that we do, and it's just exactly how our thought processes work. These videos that we post is more to understand how our method works and what our ideology is around it. And again, it's all about learning exactly what we do, because then you can just replicate the process, really. So that's ultimately what we're doing. So I hope that makes sense for this pair and where we're looking to buy. So we're looking to buy at this range, and we're looking to sell at this range if price makes that full closure to the upside or full break to the downside. Okay, so I hope that clears out for this pair. We'll move on to the next one. So the New Zealand to the Japanese yen. Again, this is, I believe, in the same sort of direction. We're close to the upside of the trend here. Sorry, the zone. So this would have been a good point, for look for reversals. Obviously, this is a hindsight sort of trade, but you can see how price had never been able to push above this point. So using this information on a higher time frame, you can look for probabilities that, yeah, price might actually reject from this point because it's not been at this level since the start of March. Okay, so from an investor's point of view, you would be looking at this, okay, and saying, this is a good point to sell or to short. But equally, if you were to just wait and play the more conservative approach, you could just simply wait for the push that we're waiting for, and if we can find that continuation and that momentum, this would be great. And it's all about finding that opportunity that we talked about. This is just a very similar pair to the Canadian dollar to Japanese yen. We're simply not going to wait and trade in between. We're just going to wait for that perfect opportunity. Again, if this happens to be the break to the upside, we'll take that break and the buy. And if it happens to be that we're looking for the sell, we will be looking for that sell from this point here. Okay, so again, trade your own way. Nothing too special here for this pair. So moving on, Aussie dollar to Japanese yen, we'll cover this tomorrow. So coming to the last 3 pair, guys. So the US dollar to the Swiss franc. So this is again in a more or less ranging bias, well, a ranging motion. There is a smaller time frame step here. We have that EMA being supported. We have this rejection zone here. So we could be looking at 2 things here: a nice 4th rejection if we come up to here, or if we're able to close above, we'll wait for that pullback again and look for buying opportunities within this range before we push higher. And consider looking at this range here, so around 0.988 if we can get to that level as our next target. But simply we're just waiting for this momentum to push to the upside and clearly showing us the direction of where we're going to go and where we want to go. Okay, so rather than, like I said, we talk about this in the Canadian and the New Zealand dollar to Japanese yen pairs, that we're just simply waiting for that breakout before we actually decide to consider this pair to trade. Okay, so again, nothing too much really to talk about. So take this with a pinch of salt and trade your own way, really. So moving on to the last 2 pairs, US dollar to the Canadian dollar. So as we talked about, we've had the zone here acted as a nice form of support, and now we came here twice during this last trading week. We found that nice momentum and a nice opportunity to buy would have been at that point. Again, we don't personally trade on the range to range bias. We simply do the trend momentum, waiting for clear direction before we start to consider um, our entry points. Okay, so what we're looking for here is just that push to the downside, the pullback, and then that push here. Same with the upside, push to the upside, pullback, and then that clear move to the upside. So again, really understanding the markets is really the real point. What we're trying to look at is, have you established a direction on your time frame? Then you can start to look for your entries, and then you can start to consider your take profit. If you lose, you lose. You just move on to the next opportunity. But just understand that the higher the time frame you go, the more valuable your considered entry point is, and your directional bias. Okay, so I hope that makes sense. So just to refrain, just to go over the technique. Once you get your bias and your direction, you could then start looking for your entries, and then once you look for your entries, you can start to look for the take profit levels. Okay, and your invalidation zones are also important as well. So your invalidation zones are where biases will switch over, so you can simply place your stop losses above that zone or below it, and if price retraces to that level, you know that price is not in your favor, and you know that's a clear direction that you're wrong. Okay, so we obviously provide those values for you, and you wouldn't have to do so much work. But again, what you should be doing is understanding where these zones come from and why we're placing them here in these specific areas of the market. Once you understand that, then you can start to then apply the method for yourself and tweak it in your own liking on each time frame. So again, we'll look at the 4-hour time frame, and this is our preferred time frame that we look at. So moving on to the last pair for this video, euro to the Canadian dollar. Again, just that choppy behavior. We're in a range bound. We know what to expect. Again, I'm not going to daddle on again, but we're looking just for a clear direction. So where's that going to happen? Okay, so if we're looking for a buy, we're looking for that push to the upside, the pullback, and then the push again. Entry point within this range here. Again, if we're looking for a sell, we're looking for the push to the downside, waiting for that momentum to the upside, and then we're going to wait for that push to be clear for the downside move. Okay, so again, there's nothing too much really to talk about, but again, if you do step on a lower time frame, this is an easy tradable option to consider. Just make sure you're using your correct risk management, and obviously have a strict trading plan to follow as well. So I hope that makes sense why we're not really covering so much today. More or less, it's a lot of repeated patterns here. The main lesson for this video is that that most pairs do have a period where they can't be traded. So if you understand that period of when not to trade in your trading plan, you can then start to understand and see where the results come from and where your drawdowns are starting to occur, where you're making your losses. It's because it's in this particular region of the market. It's because it's in this type of range. If you're a range trader, then that's great. If you're not, then stick to trends, and that's probably your best bet. If you know where the markets are ranging from, that's when you can start to really manipulate and take advantage of the market. But if you don't quite understand the ranges of the market, I'd highly recommend you to just trade with the trends. Simple, it's nothing complicated. And if you feel like you need to trade, this is where you need to start to practice your patience. But if you feel like you do need to trade, why not consider developing a range strategy, and start to take on some more back testing for yourself, understand where the market's range, build a criteria for yourself, and test it for your own liking. Okay, so ultimately that's really it for the video. We do have a few pairs to cover for tomorrow, so we have 5 pairs to look for. So next week would be I'm expecting some good moves for next week, hopefully. It just depends, obviously, with all the current news and coming to the end of the month as well, so put that into perspective. So June is just around the corner. Really, that's about it, guys. So I hope you did learn something for this video, or from this video. Just wrapping everything up, we just have a lot of range bound markets. A few pairs are tradable right now. We just have to obviously see them through, wait for that opportunity to buy or sell, and don't be aggressive with your trading. Okay. And again, if you did make it all the way to the end of this video, really do appreciate it. If you're a new trader and you haven't joined that group in our description, so that trading group, I'd highly recommend you to check it out. Again, we just post a lot of variety of things that could actually help you. So the news to watch out for each trading day. We look at the charts and give you some sort of direction and our version or in interpretation of the charts at that current time. And again, we also post some other helpful tips in that group as well. So like I said, if you're a new trader or new to this channel, I recommend you to join that group and be a member of it. So if you do have a personal question for us and you'd like to contact us, make sure to follow us on Instagram at KMTRADERS. All you have to do is just message us. I'm more than happy to help. Again, just come forward. That's all you got to do. Okay, guys. And if you also haven't done so already, make sure you're subscribed to that YouTube channel for all of our analysis videos and all future updates. Okay, so that's coming to the end of the video. Thank you very much for listening, guys, and I look forward to seeing you in that group, and I'll see you guys tomorrow. So thank you very much for listening, and I'll see you all in the next one.